So please come in. There are still some chairs over here. There are some free chairs left, and we're gonna start, but you can still come in, so don't stop at the door. So good morning, everyone. I would like to start with asking you a question first. How many of you are lawyers? So who's a lawyer? Hands up. Okay, how many of you are regulatory experts, so doing like licensing and this kind of stuff? Okay, good. And how many of you hate lawyers? Okay, not that many, so I think we are good here, we're good to go. So I mean, last week actually I was in Davos and some guy was coming to me after our talk saying, I hate lawyers, but you're fine. So I said, okay, I'm relieved. And so we are all actually somehow lawyers or regulatory experts, therefore you have to stick with us for the next half an hour. So since I already started, I'm just going to introduce myself and then I'm going to give slightly over to some of you. I'm Alireza, I'm a German lawyer. I started crypto back in 2014, so already some time. I was with some UK law firms like Simmons & Simmons, where I supported Coinbase to get the first crypto custody and exchange license in Europe, so in Germany, and some others. And for the last 4 years, I was having our own boutique law firm, Anaton. We did quite well. I left a couple of weeks ago, and I'm now with Deloitte Legal, heading the crypto initiative for the German-speaking region in Europe, and also Dubai, Qatar, Abu Dhabi, and some other jurisdictions. I'm very happy to be here today, and also to see so many friends here on this panel. I mean, there's one person who was more often than me at the Digital Assets Forum on the crypto conference, EBC, which is Joshua. So Joshua is definitely one of my top lawyers on my shortlist. And I'm very happy that you came all the way again from the US. So please, Joshua, you start. Just give a little bit insight to yourself, and then we continue with the rest.
Thanks, Alireza. Hi, I'm Josh Klayman. I'm a US lawyer. I'm based in New York. I've been in digital assets for about the past 10 years. And I'm at Linklaters, which many of you may be familiar with. My role is US Head of FinTech and Head of Blockchain and Digital Assets, and I'm one of our global tech sector co-heads. Outside of the firm, I'm on a number of boards, including the Wall Street Blockchain Alliance and several others. But I'm thrilled to be here, and shall I pass it back to you, Alireza?
Oh, yeah, thanks. So just getting water. So if you want to have some water, just help yourself, please. And Lidia, we just met in Davos, and I was very surprised because we just suddenly started speaking German. So we are some of the rare people here who can also speak German, and we have with you and with Joey some people who are inside the business, not just from the legal expert side and a regulatory expert. You really do the business, and I'm happy to have you here. So please go ahead.
Thanks for having me. I'm glad you're saying that because I was just a bit afraid, not being a lawyer, to be a lawyer here up here. No, I'm the CEO at BX Digital. We are building a trading venue for tokenized securities, with including a settlement infrastructure on public blockchain with a cash leg. Happy to talk about that in a second. But we are part of the Börse Stuttgart group, so we are the third pillar apart from the traditional business, which is a very large exchange in Europe. As well as they are running a large crypto business, and now we are building up the tokenized securities business.
Great. And Joey, we met back, I think, 2016, 2017. We set up like the Think Block Tank in Luxembourg, which was one of the first think tanks looking into crypto regulation. And we even wrote a nice paper, 270 pages on token regulation back in 2017. So I'm very happy seeing you again. And yeah, today with Xapo Bank. Please introduce yourself.
Sure. So I'm the Chief Legal Officer at Xapo. We're a Bitcoin and blockchain native credit institution, so a fully integrated operating bank that has complete integration and exposure to the space. I've been in this space a long time, proposed the development of frameworks for some small jurisdictions back in 2014. I worked with Josh as part of the RegTech initiative in Wharton with most of the authorities, I'd say, from the West. And I also act as a specialist consultant to the United Nations, so I train and assess authorities mostly in the East. So good sort of overview and picture, and worked with the Xapo Group obviously for many years to get to where we are today.
So we have experts from the European Economic Area, European Union. We have experts from the US. We have experts from Switzerland. And I would like to spend the the outlook in the next 22 minutes to look into the regulation, not just here in the UK, but also what's happening in Europe, what's happening in the US, what's happening globally. I think we have enough expertise here on this panel to talk about it. Not just about crypto or digital assets, as you call it in the UK, but also about security token and security instruments, as I think, Lidia, you're more an expert with. But let's start with Europe, because I think Europe did some great work as regulating crypto assets, putting some nice loopholes. And Joey, we both have been active in Think Block Tank and also in INAPA, which is a blockchain association of European Commission, where we helped doing like the first draft of the MiCA text. So I think we have some good insight. But you have also some expertise now coming from the practice, and I think you did also a lot in the UK. Maybe you just want to share with us
Sure.
an overview about the regulation spanning from Europe, but also UK and some other jurisdictions than US, because this is what
Yeah.
Joss is going to give us some insight.
Yeah, absolutely. I mean, I've sat in many conferences and talked to a lot of people, and when you generally hear people talk about MiCA and the EU, it's this massive sort of wonder story. I'm not like quite in that bank at all. I was also part of the Libra DM Association with representing Xapo, so we lived the e-money token piece like quite directly. I think it's great to have regulatory standards developed, and the previous panel were talking about adoption and institutional integration and pension funds, and I think regulation is a good starting point. You have to know the counterparty that you're dealing with. There has to be a certain standard that you expect from that group before you expose yourself to that market. So regulation is quite a linchpin to that test. The higher up the network you go, the more important I think that becomes. But I would say that within the EU, the starting point back in the day, and Alireza, you'll know this very well, was to create a framework that was able to balance the concept of, let's call it consumer protection, but facilitate the growth and innovation of a new developing industry. Has it accomplished that? I really don't think so. So for me, when you go into these very programmatic, rules-based detailed systems to try and regulate an industry that's unbelievably fast-moving and evolving, if you move away from principles-based regulation to rules-based regulation, it starts to create some issues. And I think some of those issues are starting to appear. I'd also say from a more kind of general perspective, the capacity within the authorities to process. So if you look at the number of CASPs that are registered in each European jurisdiction, there are some in the region of 800 or 1,000. They have a 12-month period now to try and process a license application for a complex industry, for a complex business that's looking for integration with a substantial financial services world. It's not easy. There are also, I think it's overstepped in terms of talking about this principle of proportionality, and that's something that the UK can theoretically get right. So there is what you might call a kind of second mover advantage. So the EU's done it, and it's there, and it's in place. What are the lessons that can be learned quite quickly in developing a framework? But it has to be done correctly, and it has to be done proportionally. So, again, not to go on, but if the objective is to develop a competitive market, to create a sort of global domicile for this industry, the balance is extremely fine. And what has happened in the UK so far with this MLRS, it's effectively an AML framework for registration, doesn't create the industry that we need to grow this entire space. So doesn't matter the level of AML that the FTX platform was conducting, it would not have breached, it would not have stopped some of those issues occurring. So getting that, sort of going beyond that standard, but going below the standard of the EU, the sort of too prescribed rules-based system, that's a difficult challenge. And then last words, the rest of the world. We'll talk about the US, but there are lots of industries, lots of countries, lots of areas trying to develop this in a very competitive market. And there are some intricate difficulties around that one, but I won't get into that. But that's a very general overview, but yeah.
Yeah, thank you, Joey. We're gonna touch on the other markets. I mean, I was thinking of Vara, Dubai, and Abu Dhabi especially, so we're gonna talk about this also. But talking about the US and talking about what's happening, so last week, you will remember, Lydia, when we were in Davos, there were like the inauguration of Trump, and there was a lot of happening with the Trump and Melania meme coins, which, by the way, none of the people in Davos really appreciated. So I think the majority of the crypto industry is not really a big fan of this kind of meme coins. There are some good meme coins, but this kind of meme coins, I think they're terrible for the crypto market. But the US is not just about meme coins, so. And I think you're the best person to explain it to us, what is happening right now and what kind of shift we are expecting right now happening. So, and please, Josh, just give us some insight.
Sure, and I'll try and keep it brief because I could go on and on about this, and I usually do. So I guess I would just step back for a moment and say, I've been coming to the EBC and the Digital Asset Forum since they started, right? And every time, until now, I've basically said, avoid the US, right? Be very careful, be very watchful because Gary Gensler's SEC is going to think everything's a security. And now everything is really on its head. And in my view, the US is open for business. I mean, holding aside the whole tariff stuff, right? Which obviously has affected the crypto market as well. I really think, as Alireza has mentioned, starting even before the inauguration, right? There were promises made in Nashville back in the fall, which actually Xapo Bank sponsored, where Trump promised to make the U.S. the crypto capital of the planet. Right? He made other promises as well, including about a Bitcoin stockpile, which he mentioned in his recent executive order, as well as a number of other promises. And a lot of people were wondering, were these just campaign talking points, right? Was this going to lead to anything? And sure enough, not only shortly before the inauguration did we see the Trump and Melania coins, right? Which, by the way, I think there are some questions about, KYC AML, since you mentioned that in your comments, Joey. But basically, the first week was out the gate, movement. Trump had promised the crypto community that Ross Ulbricht would be pardoned on the first day, right? And on the first full working day, he was. And the fact that Elon Musk had to come on X and basically reassure the community that it was going to happen, I mean, this shows the influence that the digital asset space is having. Same thing with the appointment of David O. Sachs as the White House's first ever AI and crypto czar, right? And I think the fact that crypto and AI are knitted together in that way, in that role, is very telling because the prior administration saw a lot of promise with AI, not so with crypto, whereas now you can see that this is really a priority. And a few other things, just that little old executive order, right, which basically said that stable coins, US dollar-backed stable coins there's going to be a big push for that, and literally outlawing CBDCs. I saw that on the prior panel, the reference to people discovering that perhaps it wasn't necessarily the best idea. And certainly that's something that that Trump is against. But beyond that, I mean, the clearing of the House in many ways, as we still have seen vestiges of the Biden administration, for example, the CFPB, shortly before the inauguration, passed or proposed some rules relating to, in-game payments and crypto assets and basically providing the same kind of protections that banks would have for electronic funds transfers. And yet, just the other day, Trump fired the head of the CFPB. And the CFPB has been very embattled. Elon Musk had said, delete CFPB, right, on X. So I think the very fact that we now have a government agency that literally is a play on Doge, right, that's pretty amazing. Now, at the congressional level, and the U.S. is very complicated because there's lots of different regulators, right, both at the federal level and the state level, many of which have overlapping jurisdiction. I think what we've seen, I'll keep it really brief, but we've seen so long Gary Gensler, now we have Mark Uyeda. He had been a commissioner as well. He went on Bloomberg TV after the election and said the era of crypto regulation by enforcement must end in the absence of fraud or actual harm, right? So he's in charge now. And Hester Peirce, who along with Mark Uyeda had entered into various dissents about a lot of enforcement actions, she's now heading up an SEC-wide task force, right? She is a person who provided not one but two potential safe harbors. And then at the federal level, back there for a second, we're going to have a digital assets working group, a digital assets market working group with the heads of all of the agencies. Congress has the banking, Senate banking now has a digital assets subcommittee that Cynthia Lummis, who is a big proponent of crypto, is chairing. I mean, there's so much more that I could go into, but I should pause.
Can I ask Josh something quick, because it's US specific as well? The crypto industry, or if everyone talks about US being very crypto friendly now, or being more on side, I mean, what exactly does that mean? I mean, if we talk about the industry as a whole, we talked about stablecoin issues, we've talked about exchanges, we can talk about custodians, we can talk about digital stock, tokenized stock related initiatives, we can talk about 1,000,001 different things, the NFT universe. Is the weighting towards, I mean, it was the Bitcoin industry that backed Trump in a big block way. Is the weighting of what the US is going to do aligned with one particular area, or is it massively open and the entire space will be regulated?
So I think that it is broadly open. I think tokenized traditional securities, but for SAB 121, which of course is gone, I think those were something that the government, including the SEC, looked on pretty favorably compared to regular crypto assets, right? So I think tokenization, I think that is going to be big, right? It already is starting to be, I think, stable coins. I do think, obviously, Bitcoin and other digital assets. I mean, David O. Sachs, I think you know him, right? He was a seed investor in Solana, right? So if you think about these sorts of things, and the Trump and Melania meme coins were offered on Solana. So I just think a lot of things are going to change. We don't know exactly how they'll change. And some things, for example, even though we don't have SAB 121, a lot of banks and others will still have to potentially contend with New York DFS, right? And whether something is virtual currency business activity, right? So there's still stuff to work out. And
yeah, I think, and before I obviously want Lidia to comment as well, but I would say very quickly, when people talk about the EU, the UK, and now the US, and the rest of the world, where a company chooses to domicile its business is sort of decision 101, but where it's looking to service people is a completely different conversation. So you can talk about MiCA, but you need to look at the ESMA consultation around solicitation that closed in December. You can talk about the FCA, but you need to look at the financial promotion regime, and if you're servicing the UK or looking to induce anyone into use a platform, then you're going to be in breach of those financial promotion rules. If you're looking to service someone in the US, that's always been the case. If you've ever onboarded someone from the US, servicing from the EU, it doesn't matter how you're regulated, you're in deep trouble. So, people have always segregated the US from the rest of the world in terms of licensing blocks. And if you're domiciling yourself in the US and you're servicing the EU or the UK, there are a whole raft of other considerations. It's more complex than just what's the best jurisdiction to domicile myself. And that's a reality as well. And there are lots of flow-throughs, implications
Can I just say
around
one
that.
more sentence?
Sure,
and
sure.
then I'll be quiet. Just for those listening who don't know me, I'm a very conservative lawyer. Like, my advice is generally very conservative. So the fact that I am saying this is a big turn. I think, Alireza,
I mean,
you can
absolutely. I
certainly-
mean, we were speaking so many times on panels together, and I remember back we were talking before what happened to FTX and after what happened to FTX, and you were always very conservative. And now I'm actually quite happy for you, Josh, because now you have the environment in the US to do some business in like going forward instead of saying no, don't do it, yeah. And this is something I think very important. And I did see that coming, actually. I was doing an interview for German TV, and back in the days when they were asking me, is Kamala Harris better or is it Trump for the crypto? And I said, if Trump is just doing like 10% what he promised in Nashville, it's already going to be massive impact. And it's exactly what happened. And therefore, I'm quite happy that we see this progress, even though I'm also not pro or con Trump. I'm like pro for the crypto industry, and this is very nice to see. But when we talk about complexity, you just touched on, and we talked about securities, digital securities. I think this is more your expertise. And digital securities, we can touch it from different angles, like tokenized stocks, tokenized other assets, or using the blockchain or DLT for as an infrastructure to do trading. I'm talking about delivery versus payment issues and other stuff. I mean, what you also should understand is that we don't only have the MiCA in Europe, the Markets and Crypto Assets Regulation, we also have a DLT pilot regime, which basically allows to do securities trading on the blockchain without the CSD. And we have a couple of players, I think one or two, who already have a DLT pilot license. But I think this is also kicking off, and also what the panel said before, a yield-bearing instrument, which is not a cryptocurrency, but maybe a security instrument. Maybe you can elaborate a little bit on that.
Yeah, very happy to do, and I think it's a very interesting discussion because I think in terms of the US, it plays into our cards as well, in the sense there is also this go for public, which up to now was a bit, especially US banks were more reluctant on that. That's the first thing. And the second thing, which I think is very important, we talk about crypto. It's a very important discussion. We talk about stablecoins. It's very important. But let's look at also the size of the markets. So if you are talking about securities, the relevance is just like X bigger than if we talk about just crypto assets. So if we talk about blockchain and crypto and tokenization, we never have to lose the fact out of from our mind that we are talking about like capital markets which have immense volumes. And we now have the chance to actually bring that on the blockchain. So what does it mean in how we are using the regulations? We are on one side in Switzerland, so we have a similar law to the EU pilot regime, which is called the DLT Trading Facility License, which exactly allows what you are saying, that you can not only do trading, but more importantly, settlement. And we are doing settlement in the sense that it's fully on a public blockchain. It integrates into fiat cash systems, meaning we can trigger payment in Swiss franc and prospectively also in euro directly at the national or central bank levels. So we can integrate blockchain and fiat and really disrupt the traditional capital markets. Now we are doing that in Switzerland because we see Switzerland as a speedboat a bit because the regulation is in place in kind of like a fixed regime, so it doesn't have any limitations like under the EU pilot regime, but it's really much a starting point. So our clients are banks, usually large banks, also other regulated financial institutions, but main clients are banks. So we are talking about the large US as well, but also European banks, which are trading and settling through our venue. So Switzerland is a starting point, but we are going to go to Europe under the EU pilot regime as well. We are obviously looking at the markets in the UK as well, now having the digital security sandbox. What we believe is very important, that we realize that tokenization is not just anymore like something small where we talk about, oh, when is adoption coming? So adoption is here right now. We are monitoring those numbers very closely. There are very good sites out there. You can see those numbers. If you look at 2022, you wouldn't even see the numbers on a graph. Couple of millions tokenized in assets. 2023, we see a couple of 100 million in tokenized assets. If we look 2024, we are now entering the billions area. So we see the moment is coming that real adoption is coming, and then we're not talking about a crypto asset class anymore. We are talking about the entirety of capital markets, and that's where our play is going.
So as you just started doing some kind of prediction, I would like to use the last 3 minutes and hear from each of you how you predict 2025. I don't want to look much more ahead because that's difficult with crypto. And I would say, if I'm allowed to start, I would say if we look at the market, and maybe Joe, you can also say something on that, we shouldn't just look at Europe and UK. I mean, I'm doing lots of right now MiCA applications with different NCAs like Luxembourg, Liechtenstein, Austria, and so on. But what I'm really impressed at is how the market's developing in the Middle East. I was recently a couple of times in Dubai, Qatar, Abu Dhabi, and there's really the momentum. We see Bitpanda which got the license. We see Telegram, which is now setting foot in Abu Dhabi, and also others who are not even dare to go to Europe. And with reverse solicitation in mind, which I would say if you do B2B business, it's actually not a bad location to look at, the Middle East. And in my opinion, if we do not watch out, if we do not give comfort to the CASP, the banks, and all the other institutions to do crypto business in a better way, we will lose the momentum against the Middle East, because there is something really happening. And with this said, how do you see 2025 for your market?
So I would say a colleague recently said that, and I think it's a very good phrase. We are not going to see the ChatGPT moment of tokenization, meaning that now it's really the moment where you have to be in. And I'm very happy then that in 2025 as well as 2026 will open up that opportunity for our existing over 50 large banks that are already our clients on the traditional side. We open up that opportunity for them to actually access those markets.
So I feel like it's hard to predict what's going to happen in 2025 in the US. I hope that by the end of the year we have some kind of federal framework, right? I mean, that's my sincere hope. I do think, though, just seeing what I'm seeing in my practice, and I'll be in Dubai later this week, so I agree with you about, things are exploding there. But yeah, I mean, I think we're going to see more digital asset spot ETFs in the US. I think we're going to see banks issuing US dollar-backed stablecoins. I think we're going to see a lot of different developments. I'm not even sure where to predict, because I don't want to predict on price or anything like that. But again, my hope is that we have an integrated framework at the federal level, which would be huge. I am really curious. This is not really a prediction, but more curiosity. One of Trump's key points has been national security, right? And so, notwithstanding the Trump and Melania coin KYC questions, I do think that KYC AML, not just in the digital asset space, but also for cloud service providers, right? In his prior administration, Trump had a infrastructure as a service provider, KYC AML. I think we're going to see more and more of that. But one thing that someone suggested to me, so maybe this is a good prediction, is that there may be a change in how that sort of thing is enforced. This is not the law, okay? So this is not legal advice. But one thing that a friend and I had been discussing, a friend that Joey knows as well, was this idea that since Trump is very for people some Americans having privacy, right, over their digital assets and their wallets, that maybe the way we do KYC AML may change in some ways, and sanctions checks, right? So that there's more done for those outside of the US than for those in the US.
Okay, so my prediction in 2025, I think that the convergence of the two ecosystems is going to accelerate more and more. We feel that we're doing that anyway in terms of blockchain native sort of integrated banking. Lidia's example on the use of the technology in the securities market, but it's going to continue to evolve and accelerate. And I think we're going to see closer and closer ties between those ecosystems, and that's going to result in bigger and bigger pressures on the unregulated markets. I think that's going to escalate as well in 2025. That would be my prediction.
Great, thank you. Big applause for the panel. Thanks a lot.
Fantastic. Thank you so much, Lidia, Joshua, Joey, and a wonderful moderator, Alireza. That was some great stuff there, some real talk.